Don't confuse my trading strategy with lines, with the system. A strategy is something completely different. A strategy is your business plan. A strategy is something that you use to make a profit. A system is the squiggly lines, the little charts, and the things that you use to take the trade with, the high probability trade. And I've had a few people get confused with that because they watch my videos and they say, but where's the strategy? I watched this for the strategy and there's no strategy. Well, there is. On every single video, there's a strategy that I've been using since the dawn of time. But it's got nothing to do with lines. I know you get onto the video and all you want to see is the lines, all you want to see is the candles, all you want to see is the charts, when in fact, that's got nothing to do with anything. The strategy is what's going to make you the money. Guys, I've been doing this for 33 years. For those of you who don't know me, I'm Rob, and for those of you who do know me, I'm still Rob, and it's Coffee with Rob. Guys, I am going to take you, and I'm going to show you a system that we use. You can copy that strategy, that system. Effectively, what we do is we first go to the charts, we use the charts, and on the charts, we will get a trade. We will find a trade that we feel that we're comfortable with. You don't even need a system. The strategy that I'm going to show you works with any system. And in fact, even the system on the charts that I'm going to show you now will work on any time frame, on any product, anywhere in the world. But bear in mind, guys, trading is risky. 60 to 80% of traders do lose money. And in fact, on 5-minute day trading, 99% of traders lose money. And I know that you think you're going to be part of that 1%, but in all likelihood, probably not. You see, everyone's told you that you're going to win by using charts. Everyone's told you that you're going to make a fortune if you just follow these chart patterns. You're going to have a win rate, and a win rate's somehow going to make you money. Guys, you have to understand, win rates don't make you money. Charts cannot predict the future. Charts cannot predict where the market's going next. All they can do is provide you with a platform to position a trade, to take a trade, and to manage your risk, and to have a plan for your trade. We're going to discuss the plan, but first I'm going to show you the systems that we use, the price action system that helps you to get into a trade and take a trade. Once you've done the trade, once you've taken the trade, once you've learned what the system is, then we can go and we can have a look at the strategy. So first, guys, before we do anything further, let's go and have a look at the charts, and then we can have a look at the strategy straight after that. Let's go. Come with me. If you're insane enough, come along, let's go and have a look. So here we are on the charts. Now that we're on the charts, now we can actually see what kind of system we're going to use to take a trade. Now, I took a trade on this, and it actually went into a loss almost immediately. So now, one thing that you can do, what I did is I took this trade based on the fact that it went past the prior high. But then that failed, it came back and it fell down. Now what I'm doing is I'm looking at the support, which I've drawn in here because we work with support and resistance. Now, these are levels. A support level is a level where the price gets to every time and it rejects it. Price gets there, rejects it. Price gets there, rejects it. That means there's money lying in that level. Also, there's a demand of money here. Supply and demand, there's a demand of money lying here because the money pushed straight up here. And there was money lying here, came back, took that money and went back up again. Came back, tried to take that money, it's coming back again. But this has now become a support, and this is trading in a range. As you can see, every time it goes up, it comes down. You can buy again, it goes up, you can sell, it comes down, you can buy again. The mistake I made was buying because I thought it had broken through, and it hadn't broken through. So that leaves me with a small loss on this particular trade. No big deal, because this is a bullish trade, which I'm expecting to resolve to the upside. If it doesn't, we have a stop loss in place. And that's the strategy that we're going to get to in a moment. You just need to manage your risk in a specific way. There was a group called the Turtle Traders that effectively made $175 million in 5 years with a win rate that was less than or between 20 and 30%. you'll think that's insane. But if you have a strategy, you can make money with that using that particular strategy. So what we do is we trade three ways. We trade with the trend, we trade in a range, and we counter trade trends. Let's have a look for a counter trade trend. If we go to the DAX, we can see we had a beautiful trend going up here. If I was to draw another line, it would be along the top here. We have this trend going up. Now you've been trading in the trend. Every time it reaches the support, you buy, it goes up. Every time it reaches the resistance, you sell, it comes down. It's in the trend, you're trading in that trend. Suddenly it breaks through the trend, it breaks through the support. So what are you doing now? Now you want to trade the counter trend because it's broken its structure, it's broken its trend. It goes back up, it retests. Sometimes people wait for the retest. You don't have to. I would have just got straight in. But it goes back up, retests, comes back out, and starts falling. Now you've got the short trade going down. That's the basis of trading. Same goes for support and resistance. If you have a scenario of support and resistance on this particular trade here, okay, this is trend again. It's in a trend, it's staying in that trend, it isn't going out of that trend. So as long as it stays in that trend, you're trading with the trend. And if it goes up, it will break. If it breaks through that, it's breaking the prior high, and then it's going to keep going to the upside. So this trade is long, and it is pretty good. But if you have a scenario of support and resistance, I just want to find one of those scenarios here. Brent crude oil might give us that. If I look at Brent crude oil, now what I'm going to do, I'm just going to draw a support and resistance in here with a line. I'm not going to go into the whole business of drawing the rectangles in. I just want to show you if you have a resistance level, I believe that would be the resistance, and you have a support level down here. So there's a support, so that's your range. If it breaks out of this resistance level and goes to the upside, same as the trend, instead of the red candle, if that was a green candle, you would go long. But it's come back, it's broken back into its range, so it's not going long from here. If it breaks to the downside and it breaks through that support level and heads to the downside, then you've got a short trade with a red candle going to the downside. Some people prefer to wait for the retest, but for example, here it broke through there, straight up, so that's a long trade. Now, a lot of people would have waited for the retest, which is over there, comes down, and then you buy it over there and go up. But you could have just bought it here as well, and it'll still go to the upside. So you don't need to wait for that retest every single time. So effectively, the three ways that we trade. So it's basically in a trend, counter trade the trend, so that's short, or trade within the range. Trading within the range sideways is actually a very, very good way to trade. A lot of people tell me, yes, but Rob, there's a third way, there's sideways. Well, actually, there's only up or down. And even in a range, it's a very tradable situation because this is sideways, but you can sell at the top, you can buy at the bottom, you can sell at the top, and you can buy at the bottom. That's as simple as it gets. Don't tell me there's a sideways. There's only an up and down. There's only a buy or sell. Trading is 50-50. Now, the charts, you only use these charts. You only use them for one thing and one thing only. And that is to take your trade and to position yourself. Once you've done that, you need to follow a strategy that's going to make you money in the markets. Let's go and talk about that. There's absolutely no way on earth that you can trade without a business plan, without a strategy. So many of you get into trading thinking that because you've been on a course and someone's taught you about some squiggly lines that we just looked at, and someone's told you that you're going to have a win rate on those squiggly lines, that you now somehow are going to make a profit, that you now somehow are going to make money out of this. Now imagine this, guys. Imagine you now start trading with no plan, and you've done the course and you know how to work with the lines now. Now you know everything about trading. You know all about the terminology of trading. You even know who started the stock market. You know everything now. So you get into trading. You take 7 trades and you win them. You win $100 on every single trade, and you run off, you tell your family, you tell everyone, you've won 7 trades in a row. That course you went on was insanely good. And you just got this natural ability to trade because you followed the rules and it all did well. The eighth trade comes along and it just starts collapsing. It goes $400 or $500 into a loss. You've worked so hard on those last 7 trades that you just won. But the eighth trade's now $500 in a loss. Now, I know you're a scalper because you haven't got a plan. And you're thinking, well, I can't let this carry on going into a loss. So the only thing I can do is dollar cost average it and make it bigger and try and get back into the cost, because you've worked it all out in your head that if you double this up and it goes back up, then I should be at a cost and I should get my money back. But that doesn't happen. It keeps on going down and it keeps on getting worse. When you look again, you're a couple of $1,000s down on that trade. That $700 profit you made is negated, and now you're $1,300 in loss. There's only so much pain you can take on any one trade, so you get out of the trade. Does that sound like you? Because it probably is. And 9 times out of 10, this is exactly what happens to traders. They get involved, they get stuck in it, and they get involved in it. Dollar cost averaging, moving the stop loss away. Why do you move your stop loss away? Why did you put a stop loss there in the first place? Did you put it there for show? Was it just put there because you thought it would look good there? Or did you actually put it there for a reason? Which brings me to the business plan part of the story. Would you start a business without a business plan? Would you open a factory? Would you open a shop? Would you do anything without knowing what you're going to do? And I don't mean you have to have a 3,000-page business plan that's labeled up into a book that you take to the bank to get the loan and all this type of thing. What I mean is, do you know what kind of business you're going to open? Do you know what you're going to sell? Do you know where you're going to get the stock? Do you know if you're going to need staff? Do you know if you're going to need machines? Do you know anything? Where it's going to be, how it's going to be, and how you're going to make a profit? All those questions you would ask yourself if you were opening a normal business. How come you never ask yourself those questions when you're starting a trading business? When you're starting to trade, you never ask those questions. Then it becomes, I'll start trading today and we'll see what happens, with no plan. And in fact, the worst of all is you'll start trading with $1,000 or $100, thinking you're somehow going to make a living out of this. That's not how it works, guys. You can't make a living out of that. If you're going to start with that small amount of money, of course you can, and you can turn it into something, but you've got to have an income from somewhere else, because the profit that you make on that small amount of money needs to compound. It needs to grow. And it won't grow if you keep taking it out. So that account will always be a $100 account, presuming that you are constantly profitable. Because we like to presume things, don't we? We like to assume things in life. Assumption is the mother of all evil and stupidity. We like to assume things. We like to assume that we're going to go in every day, we're going to work for 2 hours, and we're going to make $200 a day. What have you assumed or presumed? You have presumed that you're going to be profitable every single day within that 2 hours, and you've presumed that you're going to make $200. Shock and awe comes when you go in, you're in that 2 hours, and you're $400 down. The 2 hours is up, the whole show is done, and you're $400 down. What are you going to do? Are you going to shut shop because the 2 hours is up? Or are you going to spend the rest of the day trying to get that $400 back and still trying to make $200 profit on top of that, ending the day $1,000 in debt, down, minus, instead of $200 in profit? Now you've ruined the whole week, not even the 2 hours. Presumption, assumption, not a good thing in trading, not a good idea. The best presumption that you can have, the best knowledge that you can have in trading, is that trading is 50-50, and there's a 50% chance that you're going to lose. In fact, there's a good chance, 100% chance that you're going to lose trades, but there's a chance that you're going to lose 50% of those trades. Why is that? You see, if I toss a coin 10 times, it'll land on heads 5 times, it'll land on tails 5 times. In all probability. You might not agree with me, you might agree with me. But that's the law of the universe. That's what's going to happen. But if I told you I'll give you 2 for every heads that it lands on, and I'll take 1 for every tails that it lands on, I don't know anyone who wouldn't take that offer. Because the odds are in your favor. And this is what we've applied to our trading. Because now you've added to your edge. So now you've got a system, whatever that system is. It might not necessarily be price action on charts. It might be a moving average system or an MACD or RSI or whatever the case. It might be a completely different system. You might be using Ichimoku. I don't know. But now what you've done is you've added to that edge, because if you have a system, you believe you've got an edge, so you believe when you take that trade, there's a high probability you're going to win. Shock and awe when you lose, but you believe you're going to win. I mean, we all do. So you take the trade, you believe you're going to win, but now you add to that possibility by having a strategy on top of that. And the strategy is really simple, because once you have the strategy on top of that winning system that you have, so-called winning system, yeah, right, at least now you're giving yourself better odds in the market. And the odds are this: make more on your wins, lose less on your losses. But how do you do that? Because if you just jump into the market with no plan and you're just trading willy-nilly, I'll trade one contract on this and two contracts on that, and I'll risk $1,000 on that, $500 on that, you're never going to have control over your profits, are you? Or your losses. In all likelihood, you're probably going to lose money, because what you're going to do is you're going to risk more on the trades that you think are more comfortable for you. You're going to risk more on the trades that you like, and you're going to risk less on the trades you don't like. Then the trades that you don't like are going to win, and the trades that you like are going to lose. And it's going to flip on you, because it always does. That's the law of the universe again. It's just how it works. So what you need to do is this. And it's very simple. And I explain this strategy in every single video, so it feels like I'm repeating myself. But it also feels like I need to repeat myself, because I've seen the comments, and some guys still don't get it. They still think that somehow when I talk about strategy, I'm talking about squiggly lines. They still think that somehow I'm not telling you about a strategy. They still somehow think that it's all about the course that they went on or something. The strategy is this. It's a business plan. It's got nothing to do with the lines. You've sorted the lines. The system is sorted. You've decided how you're going to take your trade. Now you're in the trade. The plan is to manage the trade. And the plan is this. Risk 1% of your account. Now, it's totally up to you. I don't give advice. It's totally up to you what you want to risk. There are many companies out there that will risk 2%. Some will risk 5%. Some will risk 0.5%. First thing you have to determine is how much are you comfortable risking. The other thing you have to keep in mind is the size of your account needs to remain the same. Don't be growing the account in a broker's account. Get that profit out of there. Get that money out of there if you're making a profit. And if you're making a loss, readjust accordingly. Don't change the size of your trades because your account's growing. Keep the account size the same until you have a serious discussion with yourself and decide, I don't want a $25,000 account anymore. I want a $50,000 account. And then consciously change the account size and then change the risk size. So what you want to do is, if you have a $25,000 account, that's it. That's the size of your account. Doesn't matter what's in there. That's the size of your account. Now you contemplate, you are going to risk $250 per trade because that's 1% of your account. And you think, well, that's not a lot considering I've got $25,000. Why am I only risking $250? Well, look at it this way. If you take 10 trades, you're risking 10% of your account. That's $2,500. Are you going to lose 10 trades in a row? In all likelihood, not. Because even if you're a complete idiot, you should be able to win a portion of those trades. Now, the idea is for the ones that you win to run more than the ones that you lose. You're risking $250, but how do I keep that risk the same? It doesn't have to be exactly $250, by the way. It can be anywhere between $200 and $280 or whatever the case. Just keep it in that region, in that area, plus minus 1%. Doesn't have to be exact, guys. You don't go insane. Just don't make it one $250 and the other one $500, because that's just ridiculous. keep it close. How do I get that? Well, it's quite easy. I look at the trade that I want to take and I say, well, that's the trade for me. Then I decide where I want to put my stop loss. I don't want to hear tight stop loss, far stop loss, all that rubbish. I want to hear, I'm looking at an area where I know if the price gets there, my trade's invalid. There's no point in staying in the trade because it's going the other way. I've lost the trade. That's what I want to hear when you're choosing a stop loss. Now you've looked for the point where your stop loss is. And I usually also look for a point where I know the orders aren't going to take it out, because there are people where the orders are going down. They go to certain levels because the market's made up of human beings, not lines. And all those human beings are putting their orders in the same place. If you can put yours just a little bit further away than theirs, maybe you'll survive. So you put your stop loss in there. That's the area. Then I work out how many contracts, pips, whatever the situation, I can buy back to the cost. It might be 0.02 lots or something like that to make up $250 or whatever the case on any particular trade. Most trading platforms will calculate that for you. And then you can work out the size of your trade back to the cost. Now you know the size of your trade. It's $250 trade. You know the size, how many contracts you've got, how many lots, whatever the case. That's your trade. Now all you're going to do is look at the chart, look at the trade and say, okay, with this in mind, my stop loss there, my cost there, can I make more than $250 on this trade? Because that's important. Easily. Not like, oh, I'm just going to put 2 to 1. Oh, will this actually reach that price? Can this product actually reach the price to make me more than $250? Because you're an idiot if you go for a $50 profit with a $250 risk. Why would you do that? You want to make more on the wins, not less, because then everyone you lose is just costing you a fortune. What you want is to make more. You can do a one-to-one trade, because if it's one-to-one, when it gets close to the profit, you can move the profit up. You can put your trailing stop loss up behind it and try and make more on the win, because it is there at your profit, and probably it's doing quite well if it reaches there. So you've got that option. So one-to-one's not the end of the world, but try and make 300, 350, 400, 500 on a profit for a $250 loss. Try and make more on the wins. And don't just click out every time it's in profit. It goes into profit, you're like, oh, I've got to get out of that. Click, off I go. Profit's a profit. No, it isn't. That's not the way to do it. Try and move your stop loss up to cost, and then try and trail it up. Try and bring it up close when you're in total profit. There are going to be many times where you're going to get out of the trade early because of gut feel, because you can see it's turning against you, because you can see the trade is going wrong, because you can see that the whole picture has changed, particularly in a year like this, where the American politics have been so undecided and so difficult to follow. There's no perfect structure. There's no good structure to any one side. You're going to have this situation where you're going to end up dumping trades because things are moving around. Don't worry about it. Those profits will just pile in, and you're just looking for that good trade. You keep looking for that good trade. You keep following for that good trade, and just keeping the losses consistent. And somewhere down the line, you will probably make that profit. Guys, don't forget to join the members area, by the way, so that you can get trade of the day every day and see what I'm doing, and you can follow how I'm trading and see if it works for you. It might not be great for you. It might not work for you, but you can at least learn from my mistakes and my past history, or you can learn from my profits and the good things that I've done and the money that I make. It just depends what you want to get out of this and what you need. Because what I always say is, don't try and copy my way of trading exactly. Don't try and copy anyone's way of trading exactly, because I know you're not only watching my videos. Come on, let's be serious. I mean, you're watching everyone's videos because you're looking for that nugget, that next best thing. Otherwise, you wouldn't be watching these videos, would you? So the whole point is, take a little bit from everyone, take a little bit of information, and build your own setup that works for you. Build what's comfortable for you. Make your trading work for you, because not everything's going to work 100% for you. And you'll pick things out that are going to set you up. But don't put everything on your chart. Don't try and throw all the systems together, because that's one of the biggest mistakes that people make. You end up confusing yourself, and you also end up trading against yourself. But if you want to know more about my systems, if you want to know more about all the trading strategies and the best way to make money. Don't watch my last videos. Those are quite good, quite important, which side's it on. You'll find it there. Don't forget to like, comment, and subscribe, because it does grow the channel. We're growing a wonderful community here. Join us for the live shows on Tuesday and Thursday, where we have a bit of fun together, and I give a little bit of training, generally on the charts, so you can learn more on the charts, more on the systems, that type of thing, because that's also usually quite helpful for getting that high probability trade and getting something going in the market. I want to thank you for watching. Walk on the still waters. As I say, keep your feet in the ground, reach for the sky, and we'll chat again soon. Cheers, ciao, and bye.